Good morning, everybody. Anthony Crudele here, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using CME Group's event contracts. We're going to be trading indices, energy, metals, and now Bitcoin. And today, I'm going to go over ways to trade the gold market using event contracts. I'm not in my normal studio, getting some studio work done. So hopefully get to reveal the new studio for myself where I'm doing Place Your Trades, Futures Radio Show, Develop Your Edge, and all my podcasts. Hopefully here in the next few months. So I'm excited about that, but I am home today. I'm excited to be with all of you guys today talking about the gold market because I put this out at the beginning of the week and I said, man, gold that's the trade. I mean, equities, I think, have just been in a sideways range. I put this out since the beginning of May. I think that really right now, selling gold on rallies is the trade, and I'm going to explain exactly why and go back to just really the basics of themes in the marketplace and whether or not technicals confirm or contradict some of these themes. This broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading CME Group's event contracts. This is what we're all using at Place Your Trades. Now, today I'm going to show you guys how I'm using not only the DOM, the depth of market, the DOM, as Julia likes to call it. I'll also showcase the app. But I think that gold right now is really I just want to kick it off and just go right into it. And just really, I want to give a little backdrop on gold first, why this is such a big market for me. I actually just realized I'm standing in front of the gold border of a picture in my house today. That's kind of funny, a little theme builder there. No, so for gold, let's think about gold here for a second. Why was it being bought for a while now, right? Gold is being bought as a hedge against inflation, a hedge against central banks. Everybody talks about gold as that. And, most people out there in the general world, right? Not just the traders, just like us, a lot of people look at gold and a lot of people, they always ask me, well, how do I buy gold? And what's the best way to buy gold? And that's gold futures. If you're looking at price speculation, otherwise you buy the physical. I'm not big in the ETF. I think that gold futures are definitely the place, especially when you're going to be doing price speculation, which is what most people do anyway. They can tell you what they want. I mean, I always say that, you could have all the gold you want. I've been through some hurricanes here in Florida. At the end of the day, you're not swapping out gold for anything. You need gas, you need food, you need water, and people just want cash. Nobody's going to be taking gold from you. Nobody's going to have change for gold. So I always look at gold as price speculation, portfolio hedge risk, and really that's about it. That's the way I look at it. And so let's talk about the theme of it. Let's go back to the beginning of and really not the beginning of last year, but maybe towards the end of last year. Inflation is transitory, right? The Fed's starting to raise rates. Everybody starts jumping in, buying Bitcoin, buying gold, hedge against inflation, right? And so there's a theme there. And the markets build on that theme. And then you get to May of this year. Fed raises a quarter basis point. Nobody's really sure if that's really the end, although the Fed fund rates thinks that that's what the end is. You have the May 2nd and 3rd meeting, comes out, and you see on May 4th, when I pull up the charts here on gold, all of a sudden gold makes this little bit of a spike high, does a Bollinger Band piercing, and then it comes back down, it comes back out of it. And then I started looking at it going, pretty interesting. And, I talked about this morning on Develop Your Edge. Sometimes the best trade ideas we get are when we sit back and at night we think about, I think about my golf swing, that helps me go to sleep. I think about markets. I think about all sorts of different things, right? When it comes to really markets. And I'm just like, what's going on in there? And I don't want to look at a chart. I don't want to read something for a bias, but I think about a theme of what's happening in a marketplace. And to me, what was really interesting is how gold really right after that Fed meeting made that semi-capitulation high. When we get to the charts, I'll show you what I mean there. And then since it's just like the tone just changed. Felt very crowded. Everyone's waiting for that big burst move high. Everybody's talking about how gold's making, higher highs, and everyone's talking about the bullishness of gold. And if we all know one thing about trading is that when everybody's talking about something, especially people that have been pounding the table on gold, that at some point, it gets really crowded and maybe that's the time to go against it. And so you think about that subconsciously is what's going on. And so I was building this theme in my mind about how I think gold's getting ready to unwind because It feels like the Fed's done. It feels like actually things are going to slow with inflation. And it just feels like that move is already played, right? We never know, but it feels like it's already played. And so then I started looking at the charts, and that's where we're going to go to next. So what I'm going to do is I'm actually going to start off today showing you guys something. This is just a basic chart of gold. We're actually going to probably come back to this before we make a trade. But if you go and look at the Place Your Trades dashboard, we've been working with Quick Strike. You could see here is just a chart of gold, and it shows all the event contracts on the right-hand side, which is pretty cool because when we're going to get to those, I'm going to trade some of those live today. If there even is any opportunities, I'll work some bids. Maybe I get hit, maybe I don't. But you could see here to the right, in this main chart, you see all of the strikes from Quick Strike that are in the Quick Strike chart, and it shows all of the strikes that you could trade for these daily options using event contracts. And let me actually just scroll up here a little bit and also show you guys this on the dashboard side where we have the probabilities that we get from InvestaQuant every day. So you can see we're working with InvestaQuant, and we're also working with Quick Strike to help you guys get a daily edge. Really, not only if you're just trading event contracts, which are daily options, and also futures. And so gold today gapped down, actually had a 54.6% chance of rallying back above that area today to close above. This is a gap up or gap down strategy. It gapped down, and the probabilities was 54%, which is okay, not great. But once again, I'm bearish. So if anything, I was looking for things to confirm bearishness. This was almost more of a neutral type look and really didn't give me much. And then I want to go to actually the chart. And so here I am on TradingView. And, for those of you that, if you follow me on Twitter or, follow me on Place Your Trades or wherever, I did a video. You can go back and see. I did this video earlier in the week, gold's plunge, and why I think the bear market's just getting started. And I'm going to do a quick review of that. And what I want to look at here on gold is this. First off, let's go to a daily chart as I get my chart set up here. I actually got a lot going on here, and I'm actually going to remove some of these things here. I'm actually going to remove my indicator, which you can get for free on TradingView. It's just a basic indicator, which I'm going to explain in a second why I think it's something cool to use. Let's look at gold. So I mentioned that how we've had this rally up in gold, and I said it was really the trade that was in flavor for a while. And I said you go all the way up, and you get to the point where you get into this move right here. And you look at this date. This is actually, let me move this here so you can see it. This is May 4th. And if you remember, that Fed meeting was May 2nd and 3rd, and you look at this rally, it goes up, it makes a higher high, it pierces the Bollinger Band. And although that Bollinger Band, it's a 20-period, 3 standard deviation, not that big of a deal to pierce that, but it's still a semi-capitulation, right? And so you have this move where you're following the Fed days. The Fed done raising rates? Are we done potentially with inflation? Has the Fed achieved their goal? I know they're going to still talk it up, maybe a little bit hawkish, because that's kind of what they do. But I just think they're done, and I think inflation is done. And you see this move in gold, and you say, man, everybody on this day thought this thing was just going to keep going. And since then, we've just totally drifted lower. And at this point, that's why I started saying right in here, I said, you know what, gold could be done, and I think we could start to head lower. And there's a couple of things that I look at. Number one is I keep up Bollinger Bands, 20-period, 3 standard deviation. Anybody can pull these up. It's a very standard indicator. The other thing that I look at, and there's no middle Bollinger Band. The other thing I do is I take an auto-anchored VWAP, and you can double-click here. I'll just show you what it is. And when you double-click on it, it's just going to show auto-anchored for the year. You go back and auto-anchor VWAP for the year. My good friend Brian Shannon, he and I have talked about this many times over the year. He likes to anchor them to years. So do I. Just a critical point. You're looking at where the market is matched or what the market has done from the beginning of the year, and it's a really good sentiment tool. So if you're above it or below it, it tells you that the market is above the volume weighted average price. Just a really simple tool. Bullish above it, bearish below it. Most of the time, although I'm bearish while we're above it right now. Then the next thing I do is And I'm home today, everybody. So I've got some dogs running around. If you hear dogs, we always love dogs in the shows. And so my one female dog, she's always busting my chops, and she's actually staring at me right now. So she might start barking at me. What I also do is on the handoff here, on what I call the handoff, and really Brian Shannon, again, I credit him to this. When you look at any time a market crosses over a critical thing that you have, it's shifting environments. So you have this environment where it was trying to get bearish earlier. Then you got this last surge of bullishness in gold. And I'm actually going to delete those red lines. Those are horizontal lines. Less surge of bullishness in gold. And it got back above this auto anchored VWAP. And what I did is I did the handoff. I now anchored a VWAP to there. And look at how well that actually worked. Pretty incredible, right? And it just stayed and steadily above it. And I just kept watching it and watching it. And then I started to look at Bollinger Bands. And I always look at Bollinger Bands, and I look at these lines above the VWAP are just standard deviation lines, 1, 2, and 3 standard deviation lines. And so as I widen this out a little bit now, I look at it and I say, okay, the gold market, since it got above this VWAP, and we had this last bit of Fed rate hikes, and everybody's chasing gold higher, and all the sentiment talk gets very bullish. All of a sudden, you get a little bit of a shift on that pierce of that Bollinger Band, which is also a 2 standard deviation piercing, which it's done a few times in the past, and almost a 3 standard deviation move above this VWAP, and immediately comes right back in right there at that moment. Starts to take note, and you start to say, and what I'm trying to teach you here today is just understand directional moves in markets. And I'll get to intraday how I start to only look at one side of the market based upon this information. And you start to drift lower and lower, and you see can't hold above the 1 standard deviation. And you start to look and say, hey, if this thing starts to break down, I'm actually going to delete this one too. If this starts to break down, we could start going back and testing these important areas. So now that we've violated this recent violation of the VWAP from the handoff that I call it, below 1993, you see selling's accelerating. And now what you look for is this. And this is how I start to get into look for daily options, event contracts, and even intraday futures. What I'll start to look for is, okay, what did we do up top? So when we were up top in these areas right here, we were getting to 1 standard deviation moves, okay? As you can see right there in the boxes. And then we come back to the VWAP right in here, right? And so you see that. A lot of times markets work in the opposite. So now that this is resistance, what we could start potentially seeing is testing of 1st standard deviation, which it actually did today. And it pretty much is the low tick. If you look at the 1 standard deviation move down below here, it comes in just below 54. And I think today's low is like 54.40 or something like that. Yeah, 54.40. And we're sitting right here at 57. So now this 54 area is seeing what you saw in the past of a 1 standard deviation move above the VWAP. And now you're looking at it saying, could it possibly be an area where we pause and start to look for what I think going forward is what we're going to see right here. And I'm boxing out this area saying that I think what we're looking at potentially is, as I'll get my drawing tool, and is a lot of movement testing these VWAP now, and I'll draw that out, and testing the 1 standard deviation, testing the old auto anchored VWAP, and then you look for the extremes down below where all of a sudden we get moves. Potentially, I think we come in and test this area, because what we did up top is what we might do down below. And that's why I like the standard deviations. So I start to look for scenarios where when we start to see selling escalate like we are now, I look at and say, how could I best take advantage of this intraday? Couple things. Obviously, you could look at futures and you could look at everything and say, I just want to be short. But the volatility within there sometimes could be pretty strong. I'll give you an example. I went home short last night gold. I got trailed out and stopped out. I missed 20 points of this gold move to the downside. I wasn't able to get back in. I used trailed stops, and I'm trying to stay short little by little. So then you start to say, well, I want to participate in a move in a direction. Maybe I go to an event contracts. I always say that anytime you are looking at event contracts, you need to be looking at them in situational times. That means that what situation should I trade? A micro? Should I trade a full gold? Or should I trade an event contract? And what I like for event contracts are extreme possibilities, and I like opportunities to buy things that really cheap with fixed risk, but also fixed reward because they are binary because they have a $20 payout, and an event contract pays $20 or pays zero. That's it. It closes one tick above or below anything or any price that you have. And these are the strikes I showed you initially. If it closes above or below it, it pays you 20 or it pays it zero. So here, what I actually have is on this quick strike tool, and you can see this in our dashboard. It'll show you the max profit of what the potential is. And right now, today, of all the days, it's like the most difficult day to see what we could potentially do in event contracts because we're already pretty much at the bottom of what the strikes would be. So here are the strikes, the no's, which are basically puts, and the yes or calls. So two ways you could look at this. One is I'll look at it and say, I kind of like the low of 54.40 because it's one standard deviation. Could we hold above 1950 today and possibly close above it? Maybe. Or do I think that this move can continue to escalate and close below 1950? And maybe I look for an opportunity there. And so all this is showing us is what the potential payout would be. And you also can click on these other buttons that'll show you the odds of what the probability would be to close. It would show you the probability and all these different things that you could see here, right? And this is all part of the quick strike tool, which is very cool when you're deciding which strike you'd like to take. So now I want to show you a couple things. One is let's go to, well, actually gold, as you can see right here. Let me go back to this. Here we go, gold. So gold right now, the 1950 strike, no one's really even trading it because it's so far. Right now, you have volatility really high. What I'm going to do is if you go to the actual Trade-Evate, when you log in as a Trade-Evate user, you could look at this in two ways. You could look at this in your options chain, which is right here. And anytime you pull up an options chain, you'll see ECGCM3. That's the symbol. Here's all the strikes. The right side's the puts, the left side's the calls. So I'll right click actually, and I'm going to take the 1960s and I'm going to pull those up there because the 1950s right now are like, what is the likelihood of us going down there and getting some activity? Pretty low. And so, because we're trading, I think we're trading 57.70, you can see right now. So 1960, you're going to see the 1960 calls, and I'm actually going to pull up the 1960 calls and the 1960 puts. So if you're looking for a bounce, let's just say we're looking for a bounce. I'll actually step in and buy some here. If you're looking for a bounce to maybe get above 1960, let's do an example. I kind of like this low. Do I think it'll close above 1960? I don't know, but I think that because that low is pretty good, I think you might have an opportunity, and I'll step in and I'm working the bid to buy 10. I just got filled. So I just bought 10 contracts. It cost me 10 times 625, 62.50. Okay. If I'm right, it pays out 20. If I'm wrong, it's zero. Right. And so I just bought some there, and I'm looking at it saying, maybe we get a bounce. Just a couple of things could happen. One is if they get back to 1960, they're probably going to be trading around 10 bucks. I can work it off of there if I think it's going to go back up to 1960 versus buying futures right now at 57.80. I'm risking 62.50 to make $4 to make 40 bucks. I mean, it's not a big trade, obviously. I could trade as many as I want of these, but it's an easy way to participate in the long side with fixed risk and fixed reward. And maybe I go up there and I say, you know what? Maybe they do hold if they get up there, and I could sell 5 to get out of these if I want. So you can trade them, or you could hold them and wait for the 20 bucks, or you can trade out of them. And what I do is I go back to look at my scenario where, I'm actually the offer right now. Hopefully, maybe somebody will buy them. Okay. As we start to see gold is actually starting to rally again. Maybe I'll try to buy 10 more. Maybe I'll bid them up for myself here. Maybe I'll move them up to 7 bid. And as we start to see a little bit of a rally here, I'm the bid in the offer at the moment. And it goes back to, and I tried to show you some analysis of like, okay, this is my theme for gold, right? The only way I'm buying gold, and I want to go back to the chart real quick, is when we hold these one standard deviations or that VWAPs. I might look at an event contract to look for a bounce. You buy something out of the money. Maybe you get a rotation. Or if I'm looking for extremes, which today the extreme is already kind of done to the downside, you would buy something out of the money. So like, for example, if like tomorrow we got below 1938, 1940, which is where this VWAP is, I might look to buy something at like 1930 or 1920 out of the money for maybe a capitulation type move. Once again, you don't have to wait for the close, but it's up to you if you want to. You can trade them or you don't trade them. And I showed you guys hopefully today, putting everything in just the context of situations. When you're looking at markets, when you're looking at your trading strategies, it doesn't always have to be, you don't have to just always trade, a future. You can trade a micro, you can trade a micro option, you can trade an event contract. It's going to depend on the situation. It's depend on the risk. I like fading markets with event contracts like I did today with buying those 1960s, because if I go back to that, really, oh, here's the app I should show you. You could do them in here as well. You could do this on the mobile, or you can do this on your actual web browser as well. But if I go back to here, which is the way I like to do it, you could trade them on here and I could trade them back to $10. You can do, it's just a simple way. My risk is fixed. I don't have to look at it. I put the bid in. I don't have to worry about a stop. It goes to zero. I'm done. This is the true zero DTE. This is how the true zero DTEs work. And hopefully I showed you guys something and made you understand. Once again, everything is about the context of the situations. What we do here is try to show you what I showed you as a theme. I build a theme in the market, then I trade futures, I trade micros or the bigs, depending on what I want to do. Then I look for event contracts or daily options for scenarios to help me manage my risk and take advantage of market activity. And that's what we're all about here. And that's what we do here at Place Your Trades. If you enjoyed the show, please follow us on Twitter. Please subscribe and get on our email list. Those daily quant stats, all that comes through an email, so you can go and subscribe right there through our website and get on our email list to do it. You've also got Shy Girl's blog, and then you've got all of our other show hosts talking about trading, not just event contracts and daily options. We talk about trading micros and other things and just giving you guys futures content. So hopefully you got something out of today. I think that gold is going to continue to stay in probably a little bit of a bearish tone. I don't think anything changes until I see really something very different on the chart. And I just think that the theme has shifted. And so now I look for out of the money event contracts for bearish looks. Maybe I fade some moves with event contracts. Of course, we use your micro options and micro futures for the intraday stuff as well. So that does it for me, everybody. I got the gold theme once again. Hopefully you guys enjoyed hearing some of my thoughts on gold, and I wish you guys a great rest of the trading day. If you like this video, please share it with everybody else. See ya.